chart. Take a look at the bottom of the chart and tell me exactly what time the banker bet was there. There it is right there, isn't it? 16:05. The red line's dropping, the purple line's rising, and we get activity. When we get activity, we know that that's the banker bet. We know we've got to execute against that story, right? So we've got to execute against that story. There's no questions. It's a benchmark trade. That's a benchmark. So if that's a benchmark trade, we've got to have it, right? We've got to have it. The benchmark was at 108.60s. We've just traded 108.20s, guys. $400 in 4 minutes. Benchmarking makes fortunes. Benchmarking makes you fortunes. Being able to recognize the best opportunities, the highest probabilities, allows you to take your time. And then when we look at that, we absolutely annihilate it. Activity is falling, but it's still high, Simon. Absolutely. Activity is falling, but it's still high. If it's low activity, it will be below the zero line here. High activity is still above the zero. When it went above the zero, it was not a banker bet, right? If we go back to that part there, that's not a banker bet, because look at the red line and the purple line relationship. That's profit taking, isn't it? That simply suggests to me that that's profit taking, because there's no value to sell it. That must simply be profit taking. That's what that activity is. But once the profit taking's out the way from the longs, we can see if there's going to be any value left in it for us to sell, right? And that is the value that's in it for us to now sell it. It's still above the zero. It's still a spike in volume. It's still a good activity level. And therefore now I can take advantage of the value that's left in the trade to sell it now that the profit takers are out the way. So when we look at the chart, we can start to see that happening. So the profit takers that were long into this must have closed out their positions there. And that still left me an opportunity to sell into the high price. And the sell into the high price has just gone gloriously from 108.60s to a low price of 108. $600 profit, guys. Beautiful, beautiful, beautiful trade. Stunning outcome. Is that not a great bit of business? Damn right it's a great bit of business. Still short value in this at the moment, guys. Still short value, so we're looking at possibly breaking 108s. You can see that the bond never became a buy trade. We did finally get the blue line turning up, albeit belatedly. So still no real trade opportunity for me to deal in that environment at the moment, guys. Yeah. Still, well, you can see we managed to avoid selling it, right? That was a good thing. So whilst we're on offer watch, we never seen any offers. We never seen any offers. There was no opportunity for me to ever sell into that higher price. So I just let it go through. And if I start to recognize the low ball, I'll start selling into the high price. There's a little bit of vol tick up here, but yeah, it's not ideal. It's not ideal. Could it sell off from this price? Of course it could. Of course it could sell off from this price. Is it going to? Well, we never actually had any value, believe it or not. It never actually ever reached any value read. Here it is here. You can see that we're only just now getting to value. We've never once been in that red zone. Do you see that? Never once have we been in the red zone. The last trade was this buy trade here. The last trade was this buy opportunity here. We've never once been able to get back below the red zone here to give us enough value for the statistical arbitrage, R-squared sellers to come into this bond price, right? So when we understand that, we can start watching for it happening, and we can go into the bond price and we can see that the top edge there, the buy price was that exit. And obviously this move here never had any value in it, so that's why it moved so far. That kind of ties in with that concept, doesn't it? The fact that the idea that there's no value means that the price will keep moving. It's because it's just withdrawals of liquidity, right? It's all just withdrawals of liquidity. So it's going to increase volatility in that trade. And obviously when we start thinking about that, we start saying to ourselves, okay, well, there was a high bracket, there was a low bracket. Where would I expect to see the sell coming in? Probably somewhere about this price area here, right? So we can start to think about it from an order flow point of view rather than a value point of view. As we trade up into that area, you can see we're only just about to touch the red cell, which means there is building sell value. The blue line peaked at this point here. So the blue line peaked at that point there. So pretty much anything above that gives us an opportunity to sell it. It's not great, but we can sell it. And obviously that allows you to just be patiently waiting for that trade to now start. And then if you wanted to start whacking it into the measured move, I'm sure you've probably all sold off the 16s. Has it made any money? Yeah, it's made some nice money. Absolutely, it's made some nice money. But it's a choice you make again. How much are you willing to sacrifice? How much value are you willing to give back to the marketplace in those types of trades? You know, it's a decision that you have to decide kind of in advance. You don't want to make it up as you go along on the right-hand side, otherwise you'll make mistakes. So it's always one of those big decisions about how much value are you willing to give the market to get into trades that aren't quite perfectly formed. Some people will say absolutely none. Some people will say I'm willing to do a bit of business at these prices. 1 contract, 2 contracts. If your normal size is a 5 lot or a 10 lot up here, you might do 2 or 3 contracts. Make some money on the sell side. I did actually get a little bit of business, to be fair. I didn't get a lot of business. There's no point in me showing the trade we took because it was just literally a few ticks, a few contracts off the high price just to get a bit of scalp activity on this because it seemed to be setting up very close to value and I wanted to take advantage of it. But, you know, it's not, as I said, it's not something that would be writing home about, you know what I mean? The sell that we got on the oil's done well. It's back down at 108.01s. We told you that there was still some sell pressure to come from that trade, and it has played out exactly like that. So well done anybody that was able to sell back off the 25 wholesale. We've just made an extra 25 ticks on the sell trade. Well done. Very good. I like your style. How did my sell trade on the S&P do? How did my sell trade on the S&P do, guys? Yeah, we did okay. We made a measure, didn't we? We made a measure. Did it ever go bullish? No, not once. Did we make a fortune? Damn right we made a fortune. Where was the final exit? The final exit was the full measure against the full bracket. Final exit. 46 handle, guys. 46 handle. Did we call it live in the room? Yes, we did. There it is there. So there's the full trade there. We took a sell, we took some profits at the target price. This is target price number 1, this was target price number 2, and this was target price number 3. Target price 1 was the previous fractal, target price 2 was the full bracket fractal, target price 3 was the measured move. So there it is there, there's the target price there. You see this huge candle to the bottom edge. You see this huge uptick in activity. And that's the closing trade right there. That's the closing trade right there. Could you buy that trade? Well, it's still bearish. The overall shape of the value is still bearish. So we just went from 46.18s to 45.98. That's $1,000 profit. $1,000 profit. That's pretty good, right? Is there any value to buy into the bottom edge here? Well, you can see what happened. We still had some NASDAQ sellers here and some NASDAQ sellers here, but when we dropped through the bottom edge, we've now got NASDAQ buyers and S&P buyers and a little short-term turn. Now, is that just profit taking? It might be. Is it good enough to take a buy trade? Yes. Why? Because we know there's going to be a lot of profit taking. So it's good enough to take a buy trade. What else? Massive activity in the volumes. Massive activity in the volume meter right there, see it? And that allows you to take a pop at that trade. If you wanted to, do you have to? Well, it's a choice you make, isn't it? Depends what you have as a benchmark. You know, is it good enough for a benchmark? Did you see the order flow coming in? Did you see the transition taking place? If the answer to those questions is yes, then of course, yeah, it could well be a benchmark trade. It could easily be a benchmark trade coming off the bottom print. Good trade? What do you think, guys? Good trade? Very good trade. Very good trade. So Gamma's good just now, guys. Gamma's actually very bullish. If anybody's following the Gamma reads, Gamma's actually very strong for the S&P today. So I'm not averse to buying low prices. Scott, the blue line is the Dow Jones against the Russell. The Russell against the Dow Jones as a positive correlation. So it just gives us a cyclical read in the marketplace as a risk kind of sentiment narrative. You don't want to rely on it exclusively. It's always a good idea to check it against SPY VIX. It's always a good idea to check it against SPY VIX. It's always a good idea to check it against the ABCs, for example, to see if we're getting any risk on. Euro dollar, of course, is a great risk measure just now because of the fact that that's where the risk is. So euro dollar is a great risk market. Euro yen's a good risk market just now as well. So it's always a good idea to get a feeling for this idea. How's that oil sell doing, guys? 108.60s. We've just traded 107.60s. $1,000, guys. Another $1,000 banker bet trade. Unbelievable, isn't it? Is it unbelievable, though? Or is it starting to become the more obvious outcomes? Is it going to become, it's going to start to become, this is just normal. Well, it's not normal. It's never going to be normal, guys. You are doing something that is exceptional on these trades. You're beating the Bank of Monte Carlo. That's what you're doing. So when you see how good that sell trade has worked out and you can recognize that it was an absolute cracking banker sell trade, benchmark banker sell trade, and you follow it through and you say there's been no other banker sells, there's been no other banker buys, nowhere through that whole process has the same thing happened. It gives you the quality to say, no, I'm selling this, big style. And it's just done $1,000. 108.60s to 107.60s. $1,000 in 15 minutes. Is it normal? Absolutely not. We've got a couple of things. Number one, it's never normal to be able to beat the markets. It's not normal. Understand that you are doing something exceptional. Exceptional if you can beat the markets. Trading good is to break even with the markets. Being outstanding is to actually consistently win in the markets. Realize how outstanding you really are if you're winning the markets, if you're beating the markets on these trades, guys. It's not normal. That's not normal. Doesn't matter what the guys in Forex Factory tell you. The vast majority of those idiots are losing money. They might say they're making money. They're not. They're not making money at all. It's like the bookmakers, isn't it? You go into the bookshop and you talk to everybody. Everybody in the bookmakers is making money, aren't they? Everybody in the bookies, yeah, I had a great win there. And everybody else says, oh, I had a great win as well. And everybody else says, I had a great win. Yeah, why is the bookmaker driving a Rolls Royce? They're talking mince. the net average is massive losses between all those idiots, isn't it? Massive losses. So when you start realizing that if you're being able to go into that bookmakers and walk out still with your money in your pocket, whether you've made the money or not, that's great. That is really good. You've beaten their edge. If you can break even, you've beaten the bookmaker's edge, correct? Absolutely. If you can go to Vegas, and leave with the same money that you went there with, assuming you're playing games, you've actually managed to beat the bookmakers, the bankers, the casino's edge. You've beaten it by breaking even. Now, obviously, you can't make a living by breaking even. You know, Charlie actually makes a joke about that when he goes to the grocers and he says, yeah, I managed to scratch my trades. I managed to scratch all my trades today. You can't pay for your groceries with scratch trades. So you've got to make sure you're better than good. What about outstandingly good? Well, if you're making money in the markets, guys, you are outstanding. Not good. You're outstandingly good. Accept that that's the case. Accept just how much you've achieved and that you're actually able to go into the markets and make money. It's almost unheard of in the retail space. Believe it or not, it's almost unheard of in the retail space. No matter what the bullshit, no matter what they say, no matter how many things they talk about. Oh yeah, this huge profit. No, you never. Maybe 1 in 100. Maybe 1 in 100 of those guys are talking and telling the truth, but the rest of them talking load of mince. Load of mince. Doesn't time fly when you're enjoying yourself, guys? So it's 25 past 4, so we haven't even, I think Kim's been taking bits and pieces of recordings, but we've just been enjoying ourselves so much with these opportunities today. It's been difficult to get started in the classroom because there's been so many of them coming in. But we'll get started. We'll get started shortly, and we'll wrap up nice and tight. So give us another couple of minutes. Tidy off some of these trades.